Hey there, traders. This is Sam. Welcome back for another recap. Today is Wednesday, August the 6th, and we're looking at this candle right here. So they got back on top of the trend line today, and they held it. That's probably the biggest takeaway, but that doesn't mean it was a smooth ride the whole way up. Price actually gave us a nice opportunity for a trade at that trend line early in the session before they flipped the script and started grinding higher, which is something we were on the lookout for, by the way, based on the game plan that was published before the opening bell. So we'll come back to this chart again at the end of the video and talk more about what all this might mean for the next couple days or so in the SPY. We'll take a quick look at what was posted over at Ticks&Trades.com, at least on the member side. This was in the morning before the opening bell. You can see the daily levels and the game plan for the day, uploaded around 8:50 a.m. or so. So the trend line was still in play, and right from the jump, we labeled that as the bull axis. The note said if the bulls can stay above with 10 to 15 or longer candle closes, that probably means they're building energy to try to push higher. On the flip side, 627.50 was the bear axis. So that's a level that the bulls would have needed to defend if things turned downward. Anything below that, the bears would be in a better position to make a move lower. But coming into the open, price was still kind of in the middle of stuff, quote unquote. So no strong commitment either way. The levels above and below were expected to offer resistance or support as needed, depending on how the day developed. Here's a screenshot of what the SPY looked like with the levels plotted before the opening bell. Here's the full 1-minute chart of today's action. As usual, we wait the first 15 minutes out, just to give the market time to settle in before we look for official trade opportunities. So right on cue, after that window closed, price was working its way up to the trend line. So they came up close at first, didn't quite tag it, not technically a near miss, and then at 9:55 a.m., price hit the trend line. That triggered the first official trade opportunity. So going short there, following the playbook, would have netted a clean base hit. That's 4 points in the E-minis. So once they got above the trend line and started closing candles of significance above it, the bulls were basically telling us we're in control now. So a more adventurous trader could have jumped on board for a long setup somewhere in this stretch, especially after this second successful break of the trend line where they started closing above, and you could have ridden price up toward the next level. Next trade came in at 632.69. Price hit it. That gave us another base hit. Clean 4 points. Took about 8 minutes or so. So good resistance up here. You can see how long price hung out under this level trying to get above it. That's just confirmation that the level was important. Here's a recording of price action. I actually did not take any trades today. I needed to be offline around 10 a.m. to handle something else. So I didn't want to start anything that I couldn't monitor. I did have a limit order. You see it right there. I was going to sell 6 contracts. When they came up close, I changed my mind and canceled the order. That's when price pulled away that first time. So it would have been a nice trade had I chosen to take it, but I'm okay with missing it. After that, I was away from the screens for most of the morning. Price tagged 632.69 later. I also added this level here just to see what they would do with it. Wasn't planning on trading it, but it was sitting there. So I really wasn't even at my screens. I was at lunch when they hit 632.69. So no trades for me today. Here's the rest of the recording. Let it run until the close. Tracking logs are pretty easy. 2 base hits if you're playing by the rules. That's a total of 8 points in the E-minis. And those 8 points push the year-to-date return over 128%. As for my trades, over here on the Sam's Trades log, nothing on the log today. No entries, no exits, just a flat line. I'm perfectly fine with that. You don't have to swing every day to have a profitable year. Back to the daily chart to wrap things up. A couple recap videos ago, I mentioned that the SPY might be forming a bearish consolidation pattern. So if you look at this big drop from last Thursday, imagine this as one big breakdown candle all the way down to Friday's low. So that's kind of the defining candle right now, and they are stair-stepping their way up. What we're seeing could be a climb back up to the top of this breakdown candle, and typically when markets try to retrace a breakdown candle like this, you'll start to see resistance build the higher they go. And don't forget, on the weekly chart, so over here, we pretty much have what we can call a reversal candle from last week. Unless we see a weekly close above last week's candle, I'm looking at this as a possible signal that the bears might not be finished with the downside yet. So the big question is this move up currently just a retracement before another breakdown? So if so, keep your eye on this 612 to 613 zone. That's where the bulls would need to show up again if things turn south. It's a good place for them to try to defend. Should be good support down there, assuming they come back down. So we just take it one day at a time. As far as my trading approach goes, I'm just looking for high probability scalp trades intraday. I'll have fresh levels and a new game plan posted tomorrow morning. For now, I'll still say what I said yesterday. Price is in the middle of stuff. That means we stay nimble and be open to opportunities on both sides of the tape. All right, that's it for today's recap. If you got something out of this video, hit that like button. And if you want to keep following along with how these levels play out in real time, subscribe to the channel and check out Ticks&Trades.com to see how you can get the full daily levels and game plan before the market opens for yourself. So trade smart and stay patient. And remember, in this game, consistency beats intensity. Talk to you again soon.